Have you ever wondered how much Tesla stock will be after the Q3 earnings were reported? Some believe that Tesla stock will continue to go down, while others believe otherwise. You definitely would not want to miss this info. Tesla recently posted record third-quarter revenue but missed Wall Street's previous estimates. So far this year, the electric car maker has battled with supply shortages, rising costs, and fewer deliveries than expected. Before we go on, MooMoo developed a new function, the industrial chain. Suppose you want to find out the stocks that have the potential to fluctuate in the upcoming days or months. The industrial chain will help you a lot. It provides a detailed picture of the trending industries, such as semiconductors and EVs. You can quickly find stocks either upstream or downstream, which helps you focus on target segments of an industry more quickly. Also, as segments are related to industries, you could predict price fluctuations faster without reading many research reports to determine the relationships within one industry. Link in description. Tesla is rapidly ramping up production of its electric cars, but spending on new factories in Berlin and Texas, together with battery production issues, have squeezed the company's margins. The results came after an announcement in early October that the electric car maker has produced over 365,920 vehicles and delivered more than 343,830 over the third quarter. However, this has led to speculation that the company is unable to maintain demand since the company produced about 22,000 more vehicles than it delivered. Although this represents a new record for deliveries, logistical bottlenecks caused by the shutdown of a factory in China and the opening of new ones will weigh heavily on Q4's projections. Elon Musk reiterated on the recent Q3 earnings call that there was excellent demand for the fourth quarter. Tesla also came out with impressive quarterly earnings of $1.05 per share, beating the Zacks consensus estimate of 95 cents per share. According to an article published by NASDAQ, this quarterly report represents an earnings surprise of 10.53%. A quarter ago, it was expected that this electric car maker would post earnings of 61 cents per share when it actually produced earnings of 76 cents, delivering a surprise of 24.59%. Over the last 4 quarters, the company has surpassed consensus EPS estimates 4 times. Prior to the earnings call, analysts had a pretty good idea of what to expect in terms of revenue, thanks to the delivery numbers posted earlier on. The Wall Street consensus for this quarter is $22.005 billion, and Estimize, the financial estimate crowdsourcing website, predicts a higher revenue of $22.370 billion. This would be a record quarter for revenue thanks to the record deliveries. For Q3 2022 earnings, the Wall Street consensus is a gain of $1 per share, while Estimize's prediction is higher with a profit of $1.11 per share. Although Tesla delivered a record number of vehicles in the third quarter as it recovered from supply chain problems and the COVID-19 disruption in China that plagued production in the first half, its quarterly deliveries fell far short of the 359,162 as forecasted by Wall Street. Tesla said this was down to logistical problems rather than any issues with demand or production. Tesla made its usual end-of-quarter push to maximize deliveries, but said it is becoming increasingly challenging to secure vehicle transportation capacity at a reasonable cost during these peak logistics weeks. There were more cars in transit than usual at the end of the quarter, which means they won't be officially counted as delivered until the fourth quarter. Tesla CEO Elon Musk said he was working on smoothing out deliveries each quarter as it localizes production and lowers expedite costs to avoid the usual end-of-quarter rush. Wall Street currently believes Tesla can deliver 436,427 vehicles in the final 3 months of 2022. That would mark a new record and be up over 40% from the year before, but it has been lowered since the miss in the last quarter. If achieved, that puts Tesla on course to deliver 1.35 million cars during 2022. That would be up 45% from 2021, falling short of Tesla's ambition to grow annual output by around 50%. Tesla is currently expected to deliver 1.99 million vehicles in 2023, which, while impressive, would also be below its 50% growth target. Morgan Stanley was among those to curtail its delivery expectations following the update. It now expects the electric vehicle maker to deliver 1.31 million cars in 2022, down from its previous forecast of 1.37. It also cut its 2023 expectations to 1.8 million cars from the previous forecast of 2 million. Tesla's Fremont and Shanghai factories are producing a record number of vehicles at present, with the latter having benefited from a recent upgrade that doubled the plant's annual capacity. The company opened a new factory in Berlin, Germany back in March to mark its first site in Europe, and that was swiftly followed by the launch of another plant being opened in Austin, Texas in April. The ramp-up at the new sites has been challenging, and investors will want to see progress at both sites considering they have burnt through billions of dollars worth of cash this year. Not all the attention is on supply, as concerns about demand have started to emerge, although for now Tesla is still receiving orders faster than it can meet them. Wells Fargo lowered its target price on the stock earlier this month from $280 to $230 after stating that the delivery miss in the third quarter highlights rising concern about underlying demand, particularly in China. Competition is also intensifying against startups and traditional automakers, which are set to test Tesla's market-leading position over the coming years. Today, Tesla is still the dominant player and held around 2/3 of the U.S. electric vehicle market in the second quarter of 2022. Despite all concerns, Tesla CEO Elon Musk appears to be unperturbed. In the recent Q3 earnings call, he said, "I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined," referring to the Dhahran-based state oil giant. "This is the first time I've seen that potential. By the way, I should mention when I said that I see a path, I wasn't including Optimus," Musk added. Musk said the Tesla board of directors has been discussing the merits of recent demands for a buyback and believes the company could easily shoulder one irrespective of the business environment. "It is certainly possible for us to do a buyback on the order of $5 to $10 billion, even in a downside scenario for next year, even if next year is a very difficult year," Musk said. "It's likely that we will do some meaningful buyback." It can be noted that many investors have countless times aired their belief that Tesla should do a stock buyback. Musk is confident that the company is heading toward a $4.5 trillion market cap, even without factoring in a robot he expects will revolutionize his business thanks to an unprecedented future. After the Q3 financial reports, analysts shared their thoughts on Tesla stock. According to Morningstar equity analyst Seth Goldstein, after incorporating Tesla's preliminary third-quarter deliveries into our model, we reduce our fair share value estimate to $250 per share from $255. Our narrow moat rating is unchanged. The reduction comes from our outlook for lower near-term vehicle deliveries than we had previously forecast. Tesla reported preliminary third-quarter deliveries of 343,830, which is an all-time high. Reuters reported Tesla aims to produce around 495,000 vehicles in the fourth quarter. This would put Tesla a little over 1.42 million deliveries for the year, which is below our previous forecast of 1.49 million. Still, Goldstein commented, "We see no long-term issues that would affect production." Separately, our key takeaway from Tesla's AI Day was that the company continues to make progress on its autonomous technologies. This year's AI Day largely showcased the progress the company has made over the past year since its initial AI Day last August. The company's autonomous driving software continues to make progress, and we think the Level 3 version could be ready for subscription sales in the next couple of years. According to Tesla Stock Forecast 2022 from Wallet Investor, as of October 20th, 2022, Tesla could end the year at $256.07. Looking forward, the algorithm-based forecasting service estimated the stock to move toward the $361.82 mark by the end of 2023 and $470.99 by the end of 2024. The average 12-month Tesla stock price target stood at $275.68. The highest Tesla stock projection from Analyst was $526.67, and the lowest was $33.33. In terms of the Tesla stock forecast, Analyst said that the key support at $207 has again been held, and that level becomes key. If Tesla breaks lower, then it will likely test the lower end of the trend support and 200-week moving average at $160. Analysts see both the Relative Strength Index RSI and the stochastic showing a modest oversold signal. Holding $207 can see Tesla test $254 reasonably quickly, as trend following and some short covering pushes the move higher. Go to MooMoo to see exactly how Tesla stock will perform. Link in bio. When looking at Tesla stock projections, it's important to bear in mind that analysts and algorithm-based predictions can be wrong. They are based on an analysis of the Tesla share price history, and past performance never guarantees future results. Subscribe to this channel for more of this content.